This essay will show a clear path for gold and silver prices. It projects a possible price for each year from 2025 to 2050. This is a roadmap. It is not a guarantee. The world is a complex place. Events can change any forecast. However, the fundamental reasons for owning precious metals are strong and getting stronger. The primary purpose of this analysis is to give you a long-term perspective. It will help you understand how these ancient forms of money can fit into your financial future. We will explore why gold and silver are considered a powerful hedge against the slow erosion of your money's buying power, a process known as inflation. The goal here is simple. I want to demystify precious metals for the average person. You do not need a degree in finance to understand gold. It is real money. You can hold it in your hand. This tangible quality is becoming more important in an increasingly digital world. This essay will explain why metals can protect your wealth. It will also list the best and most recognized coins for private buyers to own. These are coins that are easy to buy and easy to sell anywhere in the world. They are the global standard for personal wealth protection. We will also look at history. History provides valuable lessons. We will examine simple examples of past price movements. The numbers are powerful. They show how holding a real asset over the long term can create significant wealth. The math will be straightforward and easy to follow. Inflation is a simple concept. It means that the money in your pocket buys less tomorrow than it does today. Prices for everything tend to go up over time. Bread, gasoline. This erodes the value of your savings. If your savings earn 1% in a bank account, but inflation is running at 3%, you are losing 2% of your purchasing power every year. Gold and silver act as a powerful hedge against this slow financial decay. They are real, physical assets. Their supply is limited by nature. Central banks cannot print more gold or silver when they want to. This scarcity is what gives them their enduring value. When people become worried about the future of their currency, they often turn to precious metals. It is a flight to safety. If a government prints too much money, that money becomes less valuable. People see this and look for a safe place to store their wealth. Gold and silver have served this purpose for centuries. They are a form of money that does not rely on the promises of any government or institution. They have intrinsic value. Over long periods, gold and silver tend to rise as the purchasing power of paper currencies like the US dollar falls. Think of gold as a type of financial insurance. You hope you never need it, but you are glad you have it when a crisis hits. Its value does not come from corporate earnings or government interest. Its value comes from its universal acceptance as a store of wealth. It is traded all over the world, every hour of the day. While the price can go up and down in the short term, its long-term trend has been to preserve wealth against the constant force of inflation, which is a feature of all modern economies. This roadmap presents a simplified, year-by-year price forecast for gold, measured in US dollars per troy ounce. These are not exact predictions, but guideposts on a potential path forward. They are based on long-term trends of currency debasement, increasing global debt, and continued central bank buying. The path is likely a steady, upward climb, punctuated by faster gains during times of economic stress. As governments continue to spend more than they take in, the value of their currencies will decline, and the dollar price of gold will rise to reflect this reality. The forecast begins in 2025, with gold at approximately $2,300 per ounce. We are already at this level today, on December 2, 2025. From here, the model assumes steady compounding. By 2030, the price is projected to cross 3,000, reaching 3,050. This would reflect the consequences of massive money printing in the early 2020s. By 2035, the forecast sees gold reaching 3,800. Investors and even nations will seek an alternative to low-yielding bonds that lose value to inflation. As we move toward 2040, the price is forecasted to reach $4,600 per ounce. At this stage, gold's role as a primary reserve asset would be undeniable. More trade may settle outside the traditional dollar system, with gold quietly balancing accounts between nations. By 2045, the price could approach $5,650, reflecting a cumulative loss of confidence in unbacked paper currencies. People will increasingly see their paper savings melting away and seek the permanent, tangible value that gold provides. The final leg to 2050 shows gold reaching 7,100 per ounce, simply the mathematical outcome of persistent inflation and a flight to real assets as the dollar loses purchasing power. The gold itself does not change. The ruler used to measure it does. The 2050 roadmap, a year-by-year price forecast for silver. The price path for silver is often more volatile than gold, but its long-term direction is the same. Silver is the other monetary metal, with a smaller market size and a critical industrial role, so its price can move in dramatic ways. This forecast smooths volatility to provide a clear, long-term roadmap. It is based on the same inflationary trends as gold, plus the powerful factor of rising industrial demand. As the world electrifies, demand for silver's unmatched conductivity soars, while supply remains constrained. The roadmap begins in 2025 with silver at $33 per ounce. By 2030, silver reaches $48. This reflects both monetary concerns and a growing supply deficit as industrial use outpaces mining and recycling. By 2035, silver is projected at $63, as markets recognize its critical role in electric cars and vast solar farms. Toward 2040, the forecast is $79. Silver becomes a strategic metal for the 21st century, as oil was for the 20th. Investment demand for an inflation hedge and industrial demand from manufacturers create a powerful upward force on price. By 2045, silver could climb to $99, nearing the psychologically important $100 level, a significant revaluation. The roadmap concludes in 2050 at $123 per ounce, reflecting decades of persistent inflation, technology-driven demand, and increasingly expensive new supply. Like gold, this is not about magic. It is about more paper money chasing a finite commodity. The future for silver looks very bright, very shiny. Top coins for private investors. Your guide to physical bullion. When you decide to buy physical gold or silver, it is crucial to buy the right products. For most private investors, the best choice is government-minted bullion coins. These coins are recognized and trusted worldwide. Their weight and purity are guaranteed by the issuing government, making them easy to buy and, importantly, easy to sell. They trade at a small premium over spot to cover manufacturing. Avoid rare or collectible coins. Their value is subjective and liquidity is lower. Your goal is to own the metal, not a numismatic curiosity. For gold, excellent choices include the American Gold Eagle, 22 karat, 91.67% gold with silver and copper for durability, the Canadian Gold Maple Leaf, 24 karat, 99.99% fine, the Austrian Philharmonic, the South African Krugerrand, and the Mexican Gold Libertad. You cannot go wrong with any of these. For silver, the American Silver Eagle is number 1 ounce of 99.9% pure silver, followed by the Canadian Silver Maple Leaf with 99.99% purity and advanced security, the British Silver Britannia, Austrian Silver Philharmonic, and Mexican Silver Libertad. Dealers in Tokyo, London, and Zurich instantly recognize these coins and will offer a fair price based on the world market. Show up with an obscure piece, and they must test it. Time-consuming and possibly lower offers. Buying the most popular government-minted coins is the smartest, safest way to own physical precious metals for wealth preservation. A look back, illustrating past profits with simple examples. History does not repeat itself, but it often rhymes. Past price movements show the power of gold and silver as long-term investments. These examples are not a promise of future results. They simply show what has been possible. Simple gold example. Imagine you bought 1 ounce in 2000 at about $275. By 2020, it was around $1,770, about $1,495 profit, over 500%. Silver example. In 2003, silver was about $4.80. It peaked near $48 in 2011. Roughly $43, 20 profit per ounce. a staggering 900% in 8 years. More recent gold. Buy in 2010 around 1,100. By mid-2024, it was about 2,300, about 1,200 profit, a gain of roughly 109% by simply holding. The common theme: long-term, tangible ownership. No complex trading, while paper currencies declined. Profits were metals adjusting to a world with more debt and more printed money. This is gold and silver's core function as a long-term store of value. Practical steps: secure storage, safe buying, final advice. Owning physical gold and silver is powerful, but you must do it correctly and safely. First, buy from a reputable dealer. Many years in business, a physical storefront if possible, and strong customer reviews. A trustworthy dealer sells authentic coins at a fair, transparent premium over spot. Be wary of online offers that seem too good to be true. They almost always are. Your goal is real metal, not a counterfeit. Once you own coins, storage is key. Two main options: home storage, high quality, fire-resistant, bolted and hidden, for smaller amounts with immediate access, or bank-safe deposit private vaults for larger holdings with professional security and insurance but limited access to business hours. Keep a portion of savings in precious metals. Many advisors suggest 5 to 15%. Do not put all your money into gold and silver. Metals are insurance and long-term savings. They pay no interest or dividends. Their purpose is to hold value over decades as a bedrock of your plan. A defensive asset during turmoil, while other assets provide growth. The roadmap shows steady, long-term appreciation driven by inflation and demand. Start small. Buy trusted coins like the American Eagle and Canadian Maple Leaf. Use reputable dealers and secure storage. Think in years and decades. Add real money to your foundation to help secure your financial future.